The Indian stock markets have witnessed a bloodshed today. In just one day, we have lost about roughly 6% of the market capitalization, and in absolute terms, it's about 9 lakh crores. So that's the kind of value addition that you are talking about in just one day, and this is the biggest ever market fall in a long time. I have with me Shubhmoy Bhattacharjee, who is deputy editor with Indian Express. Shubhmoy, do you think that we have bottomed out? Is it the end of such a large fall?
Vaidhi, that I think is the biggest question, because what has happened today was coming. But what people are scared about is whether this is going to be going ahead, whether the intent is looking worse or not.
Yeah.
Well, some amount of that idea will start coming in the evening, when the markets, the New York markets and others, they start showing. Because by today we have almost completed one cycle, starting from the sunrise in Tokyo, going on through India and going on to the European markets. So we would get to see much more significant pointers when the US market opens, because that will be almost be like taking a new turn.
Yeah, because a seasoned fund manager whom I spoke to with Credit Suisse tells me that one doesn't know what is exactly happening in the market and what lies ahead. So is there a sense of huge uncertainty still playing out in the market?
That's right. Basic problem that is coming out is markets play on data. And right now the current crisis is data led. The Chinese data is now suddenly suspect all over. So every data that's coming out, employment, in terms of stock market capitalization, banks weakness, anything you can talk of from China is suspect. Now when those are suspect, obviously it becomes very difficult, as you rightly pointed out, for fund managers to understand which ones to bet on and which ones to guard against.
But one thing is very clear, that there's huge global linkages and India cannot duck what is happening in the rest of the world.
Absolutely. I mean, the chances that this one happening in China is going to blow over India and going to hit the other markets across the world is just impossible. I mean, our linkage with the Chinese economy is far too huge. We have a trade dealing with them of over $100 billion. So these are massive numbers. There are so many Indian companies which are now raising funds from the Chinese market. So each one of them. So the first order would be the trade, the second order would be the financial market, in the sequence in which I see the effect coming through.
So, but do investors stay put, looking at the long term, rather than exit and then burn their fingers right now?
Well, one thing is clear: anybody who had tried to exit today would have suffered huge capital loss. So obviously, if somebody is there in the market, will have to stay on. Right now, selling means selling at a massive loss.
Retail
absolutely. Even otherwise, I mean, mutual funds, every number that you can see is down. So this is not the time to actually, sell out and to, take fresh positions. I would say that the market essentially, it would be in a position tomorrow to see, how much they can recoup. There would be, of course, bloodletting, because basically those guys who need to immediately, have problems of cash. Luckily, it's happened in Monday, when the cash cycle, if you look at the Indian market, the cash cycle peaks towards Friday. So they would typically have a problem towards that time. Monday, that way is better. But today, then again, the problem was accentuated because IOC OFS was going through, and that had taken out about 9,000 rupees from the market. So the market was essentially getting very dry.
So you would rather say that the fundamentals are strong, Indian economy is on a growth path, inflation is down, and rate cuts are in the offing, so stay invested. India is a good story in the long term.
Well, Vaidhi, that's the point. Indian balance sheet was not being questioned today. Nobody was asking questions about what has happened with India in terms of its current account deficit, in terms of its inflation, in terms of its performance about inflation. Those are all good numbers. What is lacking is forward indicators. This is the time when the government, I'm quite sure, must be sort of cursing itself that they hadn't been able to get the GST through. They haven't been able to get a movement on land law, or probably they're getting involved in too many other side issues rather than getting along with the job of getting the economy's push, because that's what the investors are looking at. As you say, that is what the investors would like to know.
Thank you so much, Shubhmoy. So essentially what we take away from today's market fall is, for the investors, is that Indian government should rather focus more on domestic reforms, take forward measures that will kickstart public investment, and also push through larger reforms like GST and land bill in the coming days. Thank you.